Hey, what's up, you guys? Today I'm going to be talking about why an investment in Facebook would be a really great idea right now. And by the way, I'm not telling you to invest in Facebook. I'm just recommending it because of a few factors that I've researched and that I've examined so far. So let's go ahead and get started. So first of all, we're gonna take a look at different FANG stocks right now. So basically, Facebook, Apple, Amazon, Google, and Netflix, and see where they're trading at right now. To kind of give you all a better idea why Facebook is the best opportunity right now from these FANG stocks. And FANG stocks are leaders in their industry. So, for example, Netflix is a leader in media and streaming video. So that's why they made that acronym for FANG, and Netflix is included in that. So as you can see, Netflix is undervalued right now compared to its highest peak, but it's definitely not that drastically low compared to its highest peak. It's pretty close. I mean, it was trading before at 408, 411 at its highest, and right now it's 363. It's still pretty high compared to um, the highest. So um, it's a good investment right now, but I wouldn't say you get the greatest return yet. Um, so this is Netflix, and so now let's go look at Apple. This company is the first one to reach 1 trillion market cap, so definitely very impressive. Right now, Apple is sort of a dominant player in the smartphone industry, selling and services as well. Right now it's at its very highest, so definitely it's a good performing stock if you already own it. But other than that, I would really not buy it right now for fast profits right now. I would look for other investments. But Apple is a really great stock to be in because it's the only one of the FANG stocks that pay a dividend, and this one's at 1.56. All the other FANG stocks do not pay nothing for a dividend. So we talked about Netflix, we talked about Apple. Next, Amazon. Amazon is a very similar situation as Apple. They reached 1 trillion market cap as well. The only two companies in the world right now that are 1 trillion market cap are Amazon and Apple so far. So we'll see who's next. But yeah, so this is Amazon highest. It's at its highest right now, just like with Apple. Many people are very impressed by the 1 trillion market cap um, sort of statistic, and so people are buying it like crazy. So that's why it's so high right now. But there's basically, unless it continues to grow, there's no really potential for profit as of now yet. You could make a lot of money if you buy right now, but it's very overvalued, and it's also really expensive. So I would sort of stay away from it for now. But if it ever drops, I would buy it immediately because you know it's a stock that's gonna recover. All right, so we talked about Apple, Amazon, Netflix. Next, Google. Google right now, it's having a sort of a tough time because of news with Trump. Trump was accusing them of faking news or not showing them not showing good positive search results on Google about Trump. And it's a good company, but it's definitely not at that of an insane discount right now. It's almost at its highest that it's ever been. So it doesn't leave much room for you to make money on. But it is a good stock, don't get me wrong. I think this one will soon be at a $2,000 valuation, just like Amazon. Next, and this one's the one I'm mainly going to discuss right now. I think Facebook right now is the best stock you can invest in as of now. It has so much potential. Right now, it's having a tough time because of the Cambridge Analytica scandal. There's a lot of privacy issues going on with Facebook, and that's causing the stock to go drop. A lot of investors are selling their shares because they're scared that Facebook's not gonna be able to add new users and keep them because of the privacy issue. So that's a reason why it's undervalued right now. And as you can see from a 5-year chart, it's been growing really well. Uh, Basically, this is just a positive investment, so it's always growing. It does have its low points, like right here. I wasn't investing at that time when this sort of happened. I'm not sure why, but did have a drop from 131 to 119. And then this is when the Cambridge Analytica scandal happened. It happened at 185. It happened when it was at 185, the price. It dropped all the way to 157, so that's about $30 potential for profit. And as you can see, it did come back to 181, and it actually went past that. It did way better than that. And then here it had its earnings report, as you can see right over here. So as you can see, normally Facebook actually always beats the expected EPS, earnings per share, but this time on quarter 2 they met their expectation but didn't surpass that. They basically just made what was expected for them, and this was a huge surprise for investors. And the main reason why this happened was because their user growth wasn't increasing as much as it used to before. Uh, so this is something that investors get scared of. They think that users are not using Facebook as much. They're not adding as many new users as they could before. But it's actually very hard to do this because a lot of people already use Facebook, and the privacy scandal happened at the same time. So it just wasn't a good situation, and it made the stock drop a lot. Um, and so basically, what I'm saying is that you can see from the 5-year chart that it has had its low points where it drops, but eventually it recovers and then progresses to an even higher stock price than it was before. And you saw this here, it dropped and overcame it, and then it continued to grow, and then here it dropped. So from technical analysis, we can conclude that it's gonna continue following the same 5-year pattern. That it has the drop that it had right now, and then slowly it's gonna start to recover, and eventually it's gonna surpass the 200, 217, $207 valuation that it was before. And since this drop, the lowest it was when once it was 171.06. It went to 180, 185 recently, but then it started dropping again, and now we see it at the same level as it was right here, 171.06. Right now it's 171.33. So you see it's at the same level as its lowest drop that it's had recently. And as you can see, it's from yesterday or today when the stock market was open. It's been recovering slowly, but yeah, you see it there. So basically, we can sort of make an estimation that it'll get to $200, the stock price, which would be around right here. So it should get there. I'm not sure how long it'll take, but based on the 5-year chart, it should definitely follow that pattern, unless something just crazy happens. And another fact that I wanted to talk about with Facebook is that um, there's very few companies that are public companies that actually have no debt. I was reading some articles online, but basically, there seems to be only like 10 or very little companies that are debt free. And being debt free is a good situation to be in because whenever the economy is tough, you're able to buy companies for such a lower price because not that many companies will have money saved up like Facebook does, and they're completely debt free, so they have more room to grow and not be limited by debt. All the other companies like Netflix, Apple, Amazon, Google, they all have debt, and Facebook does not. So it's the only FANG stock that doesn't have debt at all. And as you can see, it's these articles are fairly accurate. There's actually two that mention Facebook being debt free. I'll show you. This is a line, a very good stock too, and it's debt free. Chipotle. Facebook, here you go. So this is a completely debt-free company. So let's go back to the other article. This this one. Alright, so basically the same ones as the other article. Align, Chipotle, and Facebook's there too, as you can see. So it is a debt-free company, and that's the only FANG stock that's debt-free. So now let's go back over here. So this is basically an estimation of how much money you can make if you were to buy Facebook stock at 172. Right now it's at 171 and something. It should be at 172 pretty soon. But basically, just before you buy, you should make sure that it's trending up, so that you immediately start making profits as it goes up. So basically, for this estimation, let's say you have $1,000 saved up and you want to make money with those $1,000. I picked $1,000 because I figured that'd be a good starting point. I know some people have more to invest in, and that would just be extra profits. But I just picked 1,000 for this example. So let's say you buy it at 172, and with $1,000 you can buy 5 shares. So from 172, if you were to sell at 200, each share being 200, that would be $28 that you would make from the jump of 172 to 200. 200 minus 172 is 28. And then if you own 5 shares, you would just multiply 28 times 5. That means you'd make $140 from buying 5 shares and from the stock price going from 172 to 200. So that's really good profit already just with 5 shares. So if you buy more, this will just increase by a lot. And you can do your own math for how many shares you're willing to buy. From 172 to 190, let's say you don't want to hold it all the way to 200. You want to sell it as soon as it gets to 190. That means that you would have $18 for profit from 190 minus 172 is $18. And then if you buy 5 shares for with $1,000, that's how many you can afford with $1,000. You would be making $90 if you hold it to 190. Let's say this will be the fastest. If you buy it at 172 and you sell it at 180, and this should only take about 2 weeks in total, or it might even longer, but that's just an estimation. That means that you have $8 potential for profit for every share, and you have 5 shares from $1,000, so you would make $40. And obviously this would be less if you have less shares of the stock. But basically this is sort of an estimation of how much money you can make by trading the stock to a certain price point.